Hello, everyone. I'm Yolin, the COO of Momentum Works. For those who may not know, Momentum Works is a venture builder, and we are also a thought leadership company in Southeast Asia. So for today, we want to introduce a series called Answering the Whys. So this is a series where we want to explore the fundamentals that enable the Southeast Asia tech ecosystem. In our talk today, we have our CEO, Jianggan and our head of Insights, Alfonso, who will be joining us to talk about a topic very close to our heart and what we see in the news today. So the topic of our talk today is why should Southeast Asia investors learn from Ant Financial and WhatsApp, and what is happening and what we can learn from them. Right. So without further ado, I would like to pass the stage on to Jianggan and Alfonso to share with us their thoughts and insights about this piece.
Thank you, Yoli. I think everyone has been following what's happening in China. IPO that's supposed to be the biggest this year, and I think also the biggest in history, has been halted 2 days before trading was about to start, and just in that way, the most anticipated IPO has to suspend. So we try to link that to another story which also happened, which probably many have not noticed, which is after a few years of trying, and WhatsApp Pay, owned by Facebook, has finally been approved to launch in India. That's after lots of haggling with the regulators. So what's in common between these two stories? This is something that we want to discuss today, and how should we learn from them, and why most of its profits came from the lending products. And so there has been a lot of controversy of what should Ant Financial really be recognized as. So for a long time, the name was Ant Financial, and before the IPO, a few months before, they changed the name to Ant Group. So basically removed the financial word, which I think the leaders try to position the company more as a tech company rather than a financial company. For the right reasons, because they will be subject to different regulations, and investors will see that as different types of business, which will give them different multiples. So this has always been controversial. I think they have been working with the regulators, sometimes pushing the boundary a little bit, which I think is perfectly understandable, because that's what innovation should be. And investors have, regulators have also sort of tolerated some of the boundary pushing, and over the years, there's this balance which allowed Ant Financial to grow to what it is today. You will see that in the middle of this slide, there's this comment from Tencent's boss, and because I mean Tencent is Alibaba's biggest competitor, they also has a WeChat payment service. But for a long time, it's embedded in Tencent instead of being spun off as a separate business. So they see it very, very differently. On the right, this is an article which came out after the talk between regulators and group bosses before the anticipated IPO. This is very funny because you see an image of a horse in the clouds. Jack Ma's Chinese name literally means horse cloud. So there's some cryptic message behind it. Some people see it as a sort of a way to criticize what Jack Ma did. But what did he do? A week before that, he attended this Bund Summit, which talks about finance. And the summit was opened by the Vice President of China, Mr. Wang Qishan, and where Mr. Wang's emphasized the most important thing about finance is stability. When Jack Ma came on stage, he said, "Oh, I'm now retired. I'm no longer director of Alibaba. I can talk more freely." And then he lashed on the regulators. He said the regulators, global regulators, have become an old man's club. They stifle innovation. And he also blamed the banks of having a pawn shop mentality. Everything needs to have a collateral, otherwise it doesn't work. So he made this speech while the state regulators, all of them, were in the audience, and some of them became angry, and I think some sort of internal memos were circulated among the top leadership of China, and which led to what surprised everyone. So the halt of the IPO. there's something much deeper behind it, but I do believe that I mean the common lesson is that how do regulators interact with innovation? How do they see the innovation? And specifically about Ant, what exactly allowed them to grow, and which part becomes too risky, and how do you balance this? What's up? So that's the story. I mean, interesting. We made I mean, we do these predictions every year. End of the year, we said, okay, these are the things which are likely to happen in the tech ecosystem the next year. So we did predictions for India, and I think at that time, Facebook was saying that WhatsApp Pay, which in a way is similar to WeChat Pay in China. You have a payment system embedded into a chat app that people uses every day. So WhatsApp Pay was about to be launched in India, and we're just skeptical because to allow this powerful payment option to be launched, there are so many things that regulators need to be careful about. So you will probably, I mean, we made a prediction in December 2018 saying that it will probably not take off in 2019, and that's exactly what happened. So so I think Facebook worked really hard to launch WhatsApp payment in multiple places. Eventually, the first market they did was Brazil, and even in Brazil, it was called off by the regulators just 1 week after the official launch. That itself is also interesting, and I think we can see in a way it sort of corresponds to what Ant Financial encountered in China. So everybody thinks it's okay. Then regulators stepped in and said, okay, no, you can't do it. So finally, I think just last week, WhatsApp it received its permission to officially launch from its test base of customers to the wider audience. And I think that the regulators in India allowed it to use the settlement system that the central bank has developed, but also it introduced new rules saying that none of the players should exceed 30% of the total payment volume through the settlement system. So they also find a way to try to balance that, right? I mean, by allowing people to give more convenience to the consumers, but at the same time, sort of try to control it a bit so that each player doesn't accumulate too much power. So there's lots of I'm sure there's lots of things happening behind the scene, and each push of the boundary or each new regulation, each new sort of permit or license comes at lots of effort and resources invested. So with these two stories in the background, what can we learn? And how does that relate to what, I mean, I think both Alfonso and I stay in Southeast Asia, although neither of us came from this region. What exactly can we learn from it? I think one of the fundamentals is to understand, at the end of the day, Southeast Asia is a different market compared to China and India. And we do know that lots of international investors tend to sort of make comparisons based on the population, GDP per capita. But I think there's something more to it that will help people shape their, I think, help investors shape their investment decisions, help regulators look at, I mean, what they should really do, what they should allow, and what should the balance be. And here I'm going to pass to Alfonso to talk about, I mean, the fundamentals.
Thank you, Jianggan. So I think that what you mentioned is important, because basically what we have been trying to do in Momentum Works is to try to establish some sort of base to understand like most of the common questions that people do related to different companies. So what we have been trying to do is try to make sense of what happened with Ant Financial and how this affects to Southeast Asia. So for example, we created this report that is called Industry Enablers. And basically what we have tried to do is try to understand all of these kind of macroeconomics, regulations, and different aspects of the economy in order to see if we can actually provide an answer. And I think that there is a lot that we can tell about what happened with Ant Financial, and also how we relate that with Southeast Asia. So what does and financial situation basically mean for Southeast Asia? So like the most basic answer, and it's also a very politically correct answer, is basically it is an opportunity to learn and to proactively cooperate with regulators to improve the financial sector. So that is the politically correct answer. And in order to get the non-politically correct answer, we need to actually go a bit deeper. It is important to understand what is the role of the regulation. So I think it's interesting to understand that basically economic development of a country can be basically separated in different layers. So in the first layer, we will have something like the natural resources, the geography itself, and the population, how the population is distributed in the region. So this is actually related to the point that we were just talking, right? A second layer is actually the regulators. So now that we have all of these resources in the country, what do we do in order to have some sort of progress? And what do we do? Well, what does the country do in order to integrate this and to actually maintain some sort of unity in the country? So basically, those are the regulators. And the effects of those regulations is basically what we are depicting in the black boxes in the charts that are basically three main dimensions. So due to the effects of the regulations, everything will be materialized in terms of a level of infrastructure, a level of connectivity, and a specific level of human capital. And this works like a cycle. So I think it's very important to realize that that without regulations, basically there is no progress. Regulations is basically, it's like a way to measure ourselves. So in many cases with new products and with new technologies, basically there are no regulations because it is actually new. So there is nothing there. This is why the governments need to be very proactive in terms of talking with the companies that are innovating in order to create regulations. So this is very important to realize that still, especially now that we're talking about something that is related to fintech, there are countries that basically doesn't have a framework to process the fintech itself, to process fintech companies. So this is very important to realize. And basically those three dimensions that we are talking, infrastructure, connectivity, and human capital, what we have seen is that they are able to summarize in a very good way what is the current state of the region. So during the last 30 years, there have been a great progress in terms of infrastructure, connectivity, and human capital. And well, maybe it is a bit small for you to see, but everything is actually improving. So in terms of the governments and the regulations, you can think that countries that are higher in connectivity, infrastructure, and human capital will have a much higher exposure. The regulators will have a much higher exposure to different kind of challenges and opportunities, and to make changes too. So with this kind of framework, if you think in China, that is a country that has a bit more than Southeast Asia, you can see that they were actually much more exposed to challenges and opportunities in order to work in the regulations. So if you have problems that you have never faced very often before, there is no purpose in creating some sort of rule or process. There is no objective in creating some sort of regulation if you have faced a problem just once. But if you have faced that thing many different cases, you will create a rule in order to be able to be efficient, and also to be able to improve the current state of the economy and the population in the region. So that is also super interesting. This slide is showing how different regulations have improved. So it is difficult to measure regulations, right? This is why we're using different kind of indexes. So for example, we have infrastructure regulations, is basically regulations that are related to the efficiency to make investments in countries. For example, regulations that are related to the connectivity are basically related to the tariffs, basically to being very protective or something like that, right? So at the end, you will say that with the development of an economy, with the development of a country in terms of the infrastructure, human capital, and connectivity, the different regulations are going to actually improve, and they will actually go towards liberalization. Basically, liberalization implies more information flow and more resources flow through countries, through different countries, right? So regulations have also been improving during this last 30 years. So this is also something that is related to our previous slide, and it makes sense. Well, with progress, you will basically create new regulations. You will be able to be more proactive. You will cooperate more with the private and the public sector in order to make it happen. So in Southeast Asia, this is something that is important, that even if you have countries that are still well underdeveloped, I think that regulators can actually be proactive when talking with private companies in order to be able to measure the innovation and be one step ahead of them in order to create this kind of regulations nicely. And this is something that relates with what happened in China, right? Like regulators were actively cooperating and participating with different kind of companies, innovative companies like financial, in order to actually be tweaking their regulation and improving the regulation, and also checking what's going on with customers and with the private sector itself, in order to see if this makes sense, right? So a constant interaction with them, it is something that is nice to have.
So guys, that was a very short introduction of the episode, and lots of interesting insights from both Jianggan and Alfonso. I hope that it was useful, and I hope that you find out a bit more about the Momentum Works Enabler report. We have more coming, so stay tuned for the next episode. So in the meantime, if you look on my right-hand side, these are the ways that you can connect with us and find out more about what we do, find out more about the enabler report, and you can also just contact anybody from Momentum Works to find out more. And if you want to find out more about what's going on, or understand what's going on in our mind, go to our blog. So until next time, I'll see you guys.